What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Did you catch it? I don't know if anybody had really caught what took place today, but a very subtle divergence that we're going to be getting into momentarily. We got a lot on the docket to talk about today, so we're going to hop right into it. First and foremost, let's start off with a couple news articles of what's going on. Morgan Stanley, their warning of a stock market rally will likely be short-lived. Okay, so Morgan Stanley, big bank, thinks that this is going to be just basically a bear market rally. Jim Cramer, on the other hand, says these three big tech stocks have nowhere else to go but up. Are you inverse Cramer? Do you believe what he's going to say? What stocks is he talking about? Well, he's talking about Amazon. He's talking about Facebook or Meta, and he's also talking about Google and or Alphabet. Are these going to be heading up, or are they going to continue their downtrend? Also to note, we have Citigroup saying we have reached peak bearishness amid recession and Fed fears. So there's a lot of just back and forth news articles, right? Saying, hey, it's go long here, or we're going to be fear, which basically means, there's a lot of indecision. You got the fear and greed index. It's showing extreme fear. And what I mean by a lot of indecision is this: if you just look at the price action, you don't need to go much further than that. You can subtract a lot of this noise that's out in the marketplace. But right here, the month just finished. Now, I'll have a monthly recap tomorrow, but today I wanted to point out, right, the monthly candle, a complete indecision. It was up 0.22 on the SPX, right? So 0.22, which is 0.01%. It basically opened and closed in the very same area. Now, is this a bullish type candle? Well, we do have a long lower wick, but in order for me to really confirm a bullish monthly chart, I would like to see the price action get back above the monthly 5 EMA. And you can see here we closed not once, but 2 months in a row now underneath a declining 5-period moving average. And we're also below that 20-month moving average there too as well. Even the momentum indicators, right? It's showing wind is at our face right now, okay, if you're long. So we had that bearish crossover. The RSI is above 50, but it is still heading down that way. So we'll see here if this long upper wick showed some buyers and now we start to press up, but just be mindful that yes, we are still below that declining 5-period moving average. Also, on a good note here, just cracked 100 subscribers, so thank you all for subscribing to this channel, hitting the thumbs up, giving me comments, showing the support. It's now been 2 years, finally cracked this 100K level, which is super awesome. Thanks to all the patrons that are in the Patreon as well. Let's take a look at the 11 sectors that make up the SP 500. This is where we're going to get down into a little bit of detail. And then we'll talk about that subtle thing that most people probably didn't catch on today. So consumer discretionary led the way. Energy, surprisingly enough, was actually the big leader right out of the gate, but it ended up closing and being one of the worst performing sectors. So XLY I want to hop into. First and foremost, we're looking at the expected moves up here to around 160 to down here around 145, 146. Okay, and you can see here indecision type candle, right? This long leg doji type candle right here. After some big momentum candles, look at the bodies of these. Big bullish, 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 smaller body indicating that momentum, it's now slowing down. So it's either going to break the high and head higher or break the low and potentially head lower. This could be a period of consolidation as well. Now, my guess is that it could probably consolidate to head a little bit lower. And that is only because today's big move was really led by Amazon. And Amazon, if you watch those weekly expected moves, it did tag and got outside of the weekly expected move and came right back within it. So this is holding as of now. Now, that doesn't mean that we can't, more buying into more buying pressure and then all of a sudden, blow through this, but just be mindful that we did close at the upper expected move, which tells me it can doodle around there for the remainder of the week, which can hold XLY up, or if this starts falling down, that can bring XLY down with it. Now, another big holding in consumer discretionary, right, is Tesla. And Tesla here was pretty much unchanged for the day. It was down, it was up, it was down, it was up. And we finished pretty much on a declining 20-day moving average. So if XLY does want to start heading up, Tesla is going to have to at least perform here if Amazon's going to be taking a little bit of a break. Now, we're talking about consumers, right? And what puts the kibosh on consumer spending? Well, rising oil prices does. And oil broke out of this wedge pattern and ascending triangle, right, above that 115 and tagged a high today of almost 120, so 119.98. We'll just call it 120. And then the move completely reverted itself. As we saw, energy stocks were also the leader, right? And it completely reverted itself. Big volume day, shooting star type candle. Is this potentially going to pull back a little bit or potentially even deeper and take a little bit of a breather? Well, I want to point out XLE really quick here, and XLE, it's still above its lower expected move. This is a dark cloud coverage candle, right? So we gapped way up, moved a little higher, and then we closed almost on the low of the day, piercing through about halfway through this candle, which it's bearish, right? It's bearish until proven innocent now. So we have to get above this high to head higher. However, I do think investors will look at these opportunities here to potentially start going long because, mind you, XLE, it's still higher highs and higher lows as it stands. So it got a little ahead of itself. So a pullback maybe to the weekly expected move, I would hope a little bit deeper, and then that could be a very good opportunity to maybe add into a position or play a short-term scalp, whatever the case may be. If you look at the 15-minute time frame using the 5-day moving average, you can see here it has just landed right back on that 5-day moving average. RSI got a little bit overextended, so we can very well see a bounce here in the near future. Now, if we start heading lower, I would like to look at this level right here, 84, which 84 is just under the weekly expected move of around 86, right? So if we go back to XLE on the expected move, right, it's just under 86. So I would like to see that head just down here just a little bit more, and that could be a potentially good area to catch a bounce, right? It's right by that volume shelf profile, previous resistance, right by around that weekly expected move, and then we might catch a move, you know, right back up to the 86, which could be $2 per share. So we'll watch out for that coming into this week. See if that takes place. If we take a look at the SP 500 on the daily time frame, an indecision type candle here too as well. We did crack another high today, and we have a lower high as well. Looking at the prior candle, so pay attention to the big bodies, right? Momentum, authoritative all the way up, and then all of a sudden a small body indicating that momentum has taken a little bit of a pause here. Now, if we start cracking above the high of this, we can head higher and go potentially tag that upper risk range. If we tag lower, look for the lower risk range to get tagged. Okay, it's not necessarily going to get tagged this week, but volatility still remains elevated. Now, this is the subtle divergence that I wanted everyone to kind of watch out for. First off, so the SPY, pay attention, it hit a higher high and a higher low. What did the housing index do? The housing index put in a lower high and a lower low and is just consolidating here underneath this lower trend line. So I like to look at negative divergences. I like larger divergences on the housing index relative to the SPY because they do tend to move hand in hand. But I do want to call out the subtle one today where this was putting in a lower high and lower low at an upper area of resistance. And if this heads down, that could indicate that we might see some pressure on the S&P 500 in the near term too. But it's not just HGX. If we look at HYG, which is high yield corporate bonds, take a look here. We also put in a lower high and a lower low. Meanwhile, like I said, the S&P 500 put in a higher high and a higher low. These are both potentially just consolidating until, you know, we build up, you know, digest this big, huge move, digest, and then burst through. But as it stands right now, it is the resistance level is holding, and if this starts to head lower, that could put further weight on the S&P 500. Now, HYG, interestingly enough, if we look at the 15-minute time frame, the anchored VWAP is measured from the time when the Fed FOMC minutes came out, and you can see here it's been holding as support. So I feel like if this gives way, that might indicate further downside here in HYG, and that level is 79.36 to watch out for. If we take a look at the SPY on the 15-minute time frame, you can see it is still above that anchored VWAP from both the Fed during the 3rd and 4th meeting, and then also the FOMC minutes. So we're still above those and above an inclining 5-day moving average. And you can see here, we just saw a lot of volatility chop today. We do have a negative divergence on both the PMO and the RSI. So I would say just keep an eye on maybe this trend right here, right? It's putting in higher highs, higher lows, little up channel. But if it starts cracking down and we start taking out 410, that opens the doorway to come retest the 5-day moving average and potentially fill this gap beneath us. On the other flip side, like I said, if we start taking out the high of day, that opens the doorway to potentially head higher here. If we take a look at the VIX, what's that doing? Well, the VIX came down right? We had a little positive divergence and we popped up and we basically crushed it throughout the remainder of the day. It's still on the lower end here. So in my opinion, right? So it's still above this 25. So as long as it holds above 25, that opens the door for more risk to the upside here. So be very mindful of that. We do still have 2 gaps beneath us. If they fill, they could act as levels of support here. So be mindful of that moving forward. Now, another thing that I want to call out is the BPSPX chart. It is still not overbought, but it's getting closer and closer as the days progress here, which indicates we have a little bit more room for the upside potentially here. Doesn't mean that it has to get overbought, but it is still there. If we take a look at the Qs, also very similar type candle. We had a higher high, higher low. Indecision takes place, right? Slightly down on the day. I will say the SP 500 did look somewhat like a distribution day, so it was only one out of these big run-up, right? So it's going to digest at some point. It's going to pull back like we've already stated. Today, if that was the pullback, what a weak pullback indeed that was. If we take a look here, we are above that 20-day moving average, and really, if we got to zoom in here to look a little bit closer, 15-minute time frame, negative divergence on both the PMO and the RSI too as well. So what do we got to look for? Pretty similar to the SPY, right? It's been kind of dragging up here, higher highs, higher lows, so that's positive. But if this cracks and takes out that 305, opens the door for the 5-day moving average, and also this potential gap fill down here. So be mindful of that heading into tomorrow. Otherwise, look for consolidations, right? Tightness, and then potentially taking out the high of day. It does look like in the futures market right now it is trending up, but we'll see how that is in the morning. If you take a look at the 15-minute time frame, zoomed in a little bit more, I just want to call out we are still above those 2 anchored VWAPs there too as well. So that is a positive sign. If we start getting below those, then we can potentially be a little bit more bearish. But as it stands right now, 5-day moving average is inclining and price action continues to hold above it. If we take a look at the BPNDX chart, this is moving into that oversold territory. So is this the best area to go long? Like Kramer's saying, right? In my opinion, no. I mean, it's not quite there, and we can stay overextended for quite some time, but we've had a big run. So in my opinion, it has to digest or pull back before feeling a little bit more confident. And, you know, it goes to show you, if you just look at, you know, NASDAQ volatility, where do we close today? We closed still above 30. It's 33.01. So this is still putting in higher highs and higher lows too as well. So be very careful here as volatility remains high. Quick thing too to note is TLT. What did the TLT do? Well, I mean, we're at the end of month, right? So end of month markup, potentially it's getting out of bonds and moving into various equities, whatever the case may be. We'll see what June brings. But you can see here we got outside of the lower risk range, and we closed basically right on the lower risk range. And you saw some interesting price action right at the end of the day. You saw this big drop off here for 15 minutes, and then the last 5 minutes, we rocketed right back up into that lower risk range. So being that we're at the lower risk range, I'd imagine we can stick around here for the remainder of the week, but also it opens the door for possibilities to start heading a little bit higher. Potentially also if it became a really risk-off type situation where the market does start to pull back severely during June 1st, quantitative tightening starts. So if TLT starts popping off, we could very well see the equities come off too. And IWM, just an inside trading day today, so not much is taking place. So we got to see if it cracks above the high, which is 187.50, or cracks below the low, which is basically 184, to potentially tag that lower risk range or head lower as it stands right now. So yep, down slightly on the day. If we take a look at the 15-minute time frame here, call out. Just started with that, it ended with this shooting star type candle. So if we get below the low of that candle, that opens the door to hit this anchored VWAP from the Fed meeting. And if we get below that, that does open the door for 181. And then also 178, which is the other anchored VWAP too. Really quick, let's touch on Bitcoin. Bitcoin did catch a bid. The Saylor to Schiff ratio did turn back up. No buy signal as of yet. We need the weekly close above this area, but that is a good sign so far for Bitcoin. Once that closes above that, then we have to get the next weekly candle to close to get above the high of the prior week, and that does give us a buy signal. Keep in mind, the last 2 buy signals during the bear market basically have been whipsaws and basically 0% gainers. So we are in a bear market. That's going to produce more whipsaw type signals that we need to just be mindful of. If we continue here to the daily chart of Bitcoin, right, price action was getting very tight, and we said it's going to break either one to the upside or downside. It broke to the upside. That opened the doorway to around 32,000. The high was 32,367. So it's seen some positive momentum to the upside, but just be mindful that it is still in a downtrend. So this is nothing that I would really just get overly enthralled about, at least right now. And if you take a look at Ethereum, same thing, right? We came down to this lower level, retested it, and we just saw this big move right up into this prior area of resistance. So it has some work to do, to say the least, but we're going to continue to watch it and see what develops. Hope today's episode helped out everybody. That's all I got for you. I'll see you back here tomorrow.